You don't need to be a genius in what I do. That's the good thing about it. If I went into physics or a whole lot of other subjects, I'd be an also-ran. But I am in a game that you probably need 120 points of IQ, but 170 doesn't do any better than 120. It may do worse, probably do worse, but you don't really need brains.
Whoa, Warren Buffett just sold off $9 billion in stocks. Everyone's wondering what this means for their investments. Let's break down what he's up to and what it could mean for the market. But first, a quick reminder to subscribe so you can stay updated with all our latest content. Yeah, things are kind of crazy in the market right now. Stocks jumping around, interest rates going up. It's hard to know what to do with your money. Everyone's wondering if they should stick with their plan or make a change. It's totally normal to feel a little lost and confused. So, what's the move? Well, it's a good idea to see what the pros are doing. Guys like Warren Buffett often have a better sense of where things are headed. Checking out their strategies can give us some clues and help us figure out our next step. His moves are rarely random, and understanding his thinking can help us all. Why Buffett sold Citigroup. One of the most notable sales was his massive reduction in Citigroup. He cut his holdings by about 73%. That's a huge move, amounting to around $2.5 billion. So why did he do this? The banking sector has faced headwinds lately. Rising interest rates and overall market uncertainty have made it tough for banks. Buffett likely saw red flags in Citigroup's financials. When the outlook for a sector looks shaky, he tends to pull back. This isn't just about short-term gains, it's about long-term stability. If he doesn't believe in the future of banking stocks right now, it makes sense to reduce exposure. The Bank of America stake reduction. Buffett also reduced his stake in Bank of America by about $5 billion. This cut mirrors his concerns with Citigroup. The banking sector is under pressure from rising interest rates, which can make borrowing more expensive. Inflation is another factor that plays into this. With costs rising, consumers may be less likely to take out loans. This could hurt banks like Bank of America in the long run. By trimming his stake, Buffett is taking a cautious approach to a potentially volatile sector, shifting away from charter communications. Buffett's move away from charter communications is another telling decision. He reduced his position by nearly 30%. The rise of streaming services and shifting consumer habits have made traditional cable less appealing. In times of uncertainty, it makes sense to move away from cyclical industries like media and entertainment. Buffett prefers to invest in sectors that offer more stability. Charter may not fit that profile anymore. Buffett's decision on new holdings. Interestingly, Buffett has also slashed his position in new holdings like the fintech company, NU. He cut his stake by over 50%. While fintech might seem like a hot market, it's also risky, especially in emerging economies. Buffett's decisions suggest he's wary of international growth plays right now. The global economic slowdown and increased market risks are significant concerns. It's likely he decided to pull back on investments that don't align with his long-term strategy. Reducing stake in Louisiana Pacific Corporation. Another notable reduction came with Louisiana Pacific Corporation. Buffett cut his stake by just over 5%. The building materials company is facing challenges, with rising construction costs and material shortages. The housing market is under pressure, and that impacts demand for construction materials. By reducing his position here, Buffett is playing it safe. It's a move that reflects his cautious nature in uncertain times. Scaling back on T-Mobile. Buffett also scaled back on T-Mobile, trimming his position by nearly 7%. The telecommunications sector is highly competitive and capital-intensive. With ongoing regulatory challenges and price wars, it's a tricky landscape. Despite T-Mobile's strong quarters, the market's volatility is a concern. Buffett's decision to reduce his stake indicates he's wary of the potential risks involved. He prefers to invest where he sees stability and growth. Liberty Media and Capital One cuts. Buffett's stake in Liberty Media also saw a reduction of nearly 12%. This company has significant exposure to media and entertainment, sectors facing massive disruptions. With changing consumer habits, it's not surprising he'd pull back here. Similarly, he cut his stake in Capital One by over 18%. Like other financials, Capital One is exposed to consumer credit. Rising costs and inflation can lead to increased credit risk, making it a good time for Buffett to take profits. Buffett's strategic buys: Domino's Pizza. On the flip side, Buffett made some strategic buys as well. One of the most notable is Domino's Pizza. He added a massive 86% to his stake, worth around $460 million. Why Domino's? It's simple. In tough times, people still need food. Domino's business model is resilient. With delivery-driven sales, it's a safe bet. In an uncertain economy, comfort food like pizza always finds a market. Buffett is betting on a long-term player that consistently performs well. Investing in SiriusXM Holdings. Let's talk about SiriusXM Holdings. Buffett recently upped his stake by over 11%. This move shows he sees value in the company. In a world where streaming is king, SiriusXM is still a major player in satellite radio. Their ability to adapt is key. They're diversifying into podcasts and other audio formats. This helps them stay relevant and attract new listeners. People are consuming more audio content than ever, making SiriusXM a smart bet. Buffett likely views this as a long-term investment. He knows the demand for audio entertainment won't fade. As they continue to innovate, their growth potential looks bright. Occidental Petroleum, a long-term bet. Next up is Occidental Petroleum. Buffett increased his position by about 3%. This isn't surprising given the volatility in oil prices, but he's thinking long-term here. Energy is essential. As global demand for energy rises, companies like Occidental are well-positioned. They have a solid track record, which is crucial during uncertain times. Buffett's move signals confidence in the energy sector. Even with ups and downs in oil prices, he believes in the long-term value of oil and gas. It's a calculated bet that could pay off in the future. Decoding Buffett's investment strategy. So what's the takeaway from all these moves? Buffett is focusing on stability and long-term potential. He's selling off riskier assets and investing in companies that have proven resilience. His strategy revolves around essential businesses. Companies like Domino's Pizza and SiriusXM are not just trendy. They have staying power. They provide consistent value even during tough times. Buffett's approach is all about understanding the fundamentals. He looks for businesses with solid models that can weather economic storms. This mindset is what helps him succeed as a long-term investor. Key takeaway investors. As everyday investors, we can learn a lot from Buffett's moves. Focus on stability and long-term growth. Look for companies that can handle economic ups and downs. Don't get distracted by the latest trends. Instead, invest in businesses with strong fundamentals. Companies like SiriusXM and Occidental Petroleum have shown resilience and potential. Also consider defensive sectors. These industries tend to hold up well when the economy is rocky. Investing in essentials like food and energy can provide stability. Focus on stability and long-term potential. Remember, it's okay to reassess your portfolio. If certain sectors feel too risky, don't hesitate to pull back. Being cautious can protect your financial future. Always look for value. Seek out companies that are undervalued but have strong growth potential. Even during downturns, there are opportunities to invest wisely. Take time to review your investments regularly. If the market feels unpredictable, it's wise to reassess. Make sure your investments align with your strategy. Don't be afraid to make changes. Sometimes pulling back can be the best decision. Protecting your investments should always be a priority. If you're curious about investing, you might want to check on their platform useful, and the link is in the first link of the video description. Subscribe to our channel for more awesome content.